Time next for business news with Catherine Bennett. Good evening, Catherine.
Good evening.
Lots of movement happening on the markets today in the wake of the FinCEN files, which were leaked documents that show how major global banks transferred some $2 trillion worth of illicit funds.
Absolutely, and those $2 trillion are just a fraction of the dirty money that has been transferred around the globe. The shares of global banks have been plunging in trading today as a result. HSBC's share price in Hong Kong fell to its lowest level in 25 years, and Standard Chartered in London is at its lowest level since 1998. Deutsche Bank, one of the banks mentioned the most in the leaks and which has had previous problems, run-ins with money laundering issues in the past, that bank saw its shares fall 5.2%. We're seeing those revelations, of course, dragging down global markets. And this on top of fears of increasingly tighter restrictions because of the coronavirus. Banks and travel stocks led losses in Europe, with banks plunging 5.7% and travel stocks down 5.2%. Indices in London, Paris and Milan all fell over 3%, and it marked the worst day for the London FTSE in more than 3 months. There was a steeper drop for Frankfurt's DAX of over 4%. Over on Wall Street, indices coming back ever so slightly from steep losses in earlier trading, but the Dow Jones falling 2.5% and is still on track for its worst day since June. The S&P 500 is now down 2% and the Nasdaq is down just over 1%. These declines adding to September's sell-off, which has seen the S&P 500 plunging more than 7% overall and has brought the Nasdaq tumbling 11% after hitting its all-time high at the beginning of the month. The German airline Lufthansa has said it will cut more jobs and ground more planes as the coronavirus continues to hammer the travel industry. The company said it was losing around 500 million euros a month. Lufthansa hasn't said how many jobs it will cut, but sources suggest it could be around 5,000. That's on top of 22,000 jobs already lost earlier this year. The airline secured a €9 billion bailout from the German government in June, giving the government a 20% stake in the company. Today is Global Zero Emissions Day. Vehicle companies are increasingly looking at hydrogen as a more environmentally friendly energy source. But the question remains, is it truly viable for the industry? Luke Schrago tells us more.
They may not be lighter than airships, but Airbus wants to put hydrogen back at the heart of flying, unveiling concepts for 3 new aircraft powered by the substance that would emit nothing but water vapour, in a sector that currently accounts for up to 3% of the world's carbon dioxide emissions.
We see it as a huge business opportunity. We see it as something that the airlines are asking for from us. And on top, we see it as a moral obligation that we need to bring climate neutral flying to society. Airbus had set itself a huge ambition to deliver a zero-emission aircraft to its customers by 2035.
With the environment taking on increasing importance in recent years, reducing emissions has become paramount for many industries. In Germany, Alstom's been testing a hydrogen-powered train, and Austria's national rail network is considering whether to replace its diesel stock with the new design. There's research into road transport too, with firms like Toyota coming out with the Mirai concept vehicle. However, when it comes to that area, at least with cars, hydrogen's nowhere near as efficient as battery-powered vehicles, consuming 2 to 4 times more energy. And what's more, there are other issues at play.
Electricity is ubiquitous. You can also buy gasoline anywhere, the most remote place in New Guinea. But to find hydrogen is difficult, and to create a global distribution or even nationwide distribution system with such a volatile fuel, that's a huge mission.
The European Union, though, is on board with that mission, with Brussels seeking to focus on hydrogen fuel in the long term. France has already set aside €7 billion to develop it, with Germany set to invest €9 billion. And it seems Airbus has now taken the EU's flight plan to heart, particularly after it received massive state aid during the coronavirus pandemic, which left air transport all but stalled.
The electric truck maker Nikola announced today that its founder and executive chairman Trevor Milton would be stepping down after allegations of fraud. Milton said that he would resign as director, but he remains the company's largest shareholder, holding around a quarter of its stock worth some $3.3 billion. It's been a rollercoaster 2 weeks for the company. The firm scored a $2 billion alliance with General Motors on September the 8th, causing shares to leap 41%. That all came crashing down just 2 days later after an investment company accused Nikola of intricate fraud. The report said that Nikola's main technology was actually purchased from another company. That sent shares plummeting 36%. General Motors has said it is sticking by Nikola and its deal will go ahead, despite its shares falling 5.8% in response to the scandal.
And that's it from you. Thank you very much for that, Catherine. Catherine and Bennett there from the business team. We're going to take a quick break. More news coming up. Stay with us.